Okay, good evening all of you. So welcome to the new session of fundamental and technical analysis. So today we are covering ratios. Okay, so the why today we are covering this very unique ratio which I learned from one of the fund managers. This is basically from Equitas PMS. They are one of the best, doing very good in PMS space. So the name is Mr. Sandeep, fund manager name. So while going through his few interviews, there he mentioned about this, and then I dig deep, and I thought this is very important in terms of understanding how we should use market cap and sales. Okay, so one very important learning is uh, uh, there is market cap as such may not be so important. Okay, in terms if company is growing, sales are growing, margins are growing. Okay, sometimes we feel that 2 lakh crore market cap, 1 lakh crore market cap, whether it will grow or not. Okay, and then we try to see small cap companies with 2000 crore market cap, 1000 crore market cap. Okay, so it is very much possible that a large companies with large market cap also, but growing business, growing sales, growing margins can become a huge, can also be a multi-bagger. Okay, now how to use this? Okay, now that is very important. So what I have done is I have taken this example, okay, and some variables in the net profit margin, how we can use market cap, sales and margin to understand the broad cycle of the stock. Okay, so two examples I have taken, 2 years I have taken here. Okay, so one, this is an actual company. Okay, so in 2024, now current market cap is 56,000 crores, and 2017 the company market cap was 6,000 crore. So anyone can tell me how many times the stock has grown in just 7-8 years?
9 times.
10 times.
10 bagger, correct? Almost 60,000 crore is the current market cap, correct? So this is 10x this company has grown. Okay, now that time when in 2017 sales was around 9,000 crores, it is in all 1,000 crores. Okay, all the figures are in crores here, and market cap was how much? 6,000.
6.74. Yeah, 6,000.
6,000, correct? So if you see market cap to sales, it was trading at 0.6 times or 0.7 times market cap to sales. Okay, now if you take just this data, what first thing is, when sometimes you see some companies are trading say 2 times, 3 times, 4 times of sales. Okay, so let's take some example. Okay, so for example, anyone can take any company. We'll take any company. Okay, let's say Gensol. Okay, Gensol, what is the market cap?
3,000.
3,800 crores. What is the sales?
686.
686. Trading almost 5 times, 5 to 6 times of its sales. Market cap is 5 to 6 times of the sales, correct? Now imagine you have here a stock which is trading less than 1 time of sales. Okay, and currently it is 56,000 crore current market cap, sales is 38,000 crore. Now it is trading around 1.4 times of the sales and grown almost 10x, and sales have also grown. Okay, that time price was around 75, and now current price is around 692. Okay, now how to use it? Okay, so if you are getting anything within one less than market cap less than the sales, or within 1 or 2 times, I think it is worth analyzing, provided so many other parameters which we'll discuss in brief. Okay, now what I have done is how to use this. Okay, now imagine
That means it is undervalued, stock this. If it is say trading below the 1 time of the stock's market cap.
good point, Govind. So what we'll do is now I'll come to that, how to analyze that, whether it is undervalued or first. What we are trying to understand is why we are using this. We are using this to understand what can be the extreme valuation, what can be the bottom. Okay, so extreme is very difficult because I request all of you to please keep in mute if you are outside. Okay, so how it will help? No, it will help us in identifying I request everyone keep in mute.
I think someone is logging from two devices.
Now it is fine. I've muted them. Okay. So now the best part is upside, the stock can keep going up. Okay. If it is doing good. But how this will help us is understanding when stock is correcting and to understand where can be the broad bottom actually. Okay. Now how to do that? So what I have done is I have taken this company. Now I'll tell you the name of the company is Jindal Stainless. Okay. I'll show you the chart now. So we are going now how to understand. Okay. So I'll go to screen and I have kept it open. Jindal Stainless. Okay. Now you can see now current market cap is 57,000 crores, trading 20 times. Sales is 38,000. Now currently it is trading around 1.4 times of sales. Still I think valued decently. Now the only problem is this is a commodity business. Okay. So if your cycle turns, that is demand decreases, then obviously margins will shrink. Okay. So what I have done is now you see here, see the margins. So this is from 2013, correct? 2013, 2020, last 10 years data is there. What is the extreme, what is the highest margin and what is the lowest margin? This is Jindal Stainless. So you can see sales, correct, from 2012. What is the highest margin and what is the lowest margin?
Highest.
Till now, 16% is the highest margin.
Highest is 16. Okay. What is the lowest?
2022. Lowest will be 6%, 5%.
5%. Correct.
5.
Now, see, when you have taken the last 10 years data, what has happened is you have got one very good idea that कि भाई margin जो है इससे नीचे तो नहीं जाएगा operating margin. Correct? Is clear? Here it is EBIT, earning before interest and tax, because you can see only below that only interest and depreciation is there. Less all expenses are covered here, employee cost, material cost, everything in screener. So this is basically your EBIT margin, correct? And that is what I tell. If consider EBIT and then earning before tax. So interest and depreciation also be taken care, but this will give you a broad idea when you are combining two companies, excluding interest and depreciation, mainly interest, because some company may be well funded, other may not be well funded. Has taken loan, then interest will be there. But industry wise, you at least you will have an idea that what is the worst and the best margin on a last 10 years basis, correct? तो एक cycle तो हो गया रहा है, correct? तो अगर मान लो next time, now here what is the current margin now? 2023?
10%.
10%. Agar 2024, if margin increases to 16%, that means 6% extra, correct? Profitability will increase or decrease?
Increase.
Increase. Suppose it comes down to 5%. Okay. Profitability will decrease or increase?
Decrease.
Decrease, correct? Now, in future, say 4 years down the line, you see 5% margin or say 4% margin. Don't you think is you have a fair idea that this is somewhere the price should be near the bottom? Yes or no?
Yeah.
इससे तो नीचे नहीं जाएगा. Correct?
Yes.
Yes or no? Correct. So what will happen is, if in future, suppose now what I have done is I have taken 7% as the lowest margin. I have taken 10%. I have taken 12 as the best margin in any company. And now I'm taking one scenario. Okay. What you can do at that point of time is, agar say for example market cap to sales, suppose it is, we'll take 2017 as an example. Okay. Okay, we will take 2017 as an example. Okay, so suppose your sales is now, let's not focus on market cap. Now we'll focus on sales. If sales is 9,000 crore, okay, and I have taken here margin, say I have multiplied. What is the profit? 649 crores. Correct? Yes or no? If correct, no, 7% is 649 crore. That means, and market cap is 6,000 crores. That means what is the profitability at EBIT level. So if I divide this, if I divide market cap to EBIT margin, if I divide market cap to EBIT margin, how many times it is trading?
9.5 times. Yeah.
9.5. This is what I have mentioned here. So that means आपको stock EBIT level पे 9.5 times मिल रहा है, correct? Average अगर 10% है तो 6 times मिल रहा है और 12% है तो 5 times मिल रहा है, correct? Yes or no? ठीक है. That means if you are able to start accumulating at the bottom and from there, considering everything remains same and you assume next 2-3 year margins will improve, don't you think you are getting stock at 6 times average valuation next 2-3 years? Means you are able, you can start slowly accumulating the stock, and if you have a long-term horizon holding period for that particular stock or sector, I think, and then margin improves. If you assume, if you see here, then slowly from 5 next year is how much? 8, correct? 2012 was 11, correct? तो आपको आधे मार्जिन में अगर कोई मिल रहा है बॉटम में, then obviously at this, no need to see the chart. If you see the chart, it will be at bottom only. Let's see 2015. Where was the price? 16 rupees. Hope you're understanding what I'm trying to tell. And then you have to wait. See, when you are trying to do such kind of value buying, then you have to wait, because now what you are telling is, I will wait for the sector to improve from that. But that is a very good point to do value buying actually. Yes or no? Hope
Yes,
you're able to
Neeraj.
understand. Okay. So
But Neeraj, I think that the conviction in this kind of scenarios should be a lot higher, right? Because you're holding the stock for a substantial amount of time.
very good, Govind. Very good. Okay. I'll send you some gift actually. Okay. So see, so that is the beauty. See, when you are doing value buying, okay. So see what, when I'm telling, when you are seeing last 5 years, 10 years of history, so that means you are ready to hold for next 3, 4, 5 years. When the tide will turn, or when the margins will improve, then only you will see that re-rating of the stock, correct? When margins will improve. But how this will help us is, at least you know that you will not lose too much money from there. If you are able to get into that particular point, you will not lose too much money from there. But upside is very huge, correct? And that is what we want to do, correct? Now,
Yeah.
you're getting a point, no? See, we are trying
Yes,
to
yes,
understand, we are trying to be value investor, correct? So how do you
Right,
identify
right.
that? And that is where I find this ratio is so interesting, that if it improves, you are getting the whole at 6 times, correct? And here now in
Correct.
this, sales is not considered, sales improvement, margin improvement, sales improvement not considered. Now, if you see interest, now if you consider this company, you see the interest cost. Okay. Interest cost is how much?
Neeraj, in this, I have one doubt. This is PE
Yes.
ratio, right? Whatever you are explaining, that's a PE ratio, right?
Price to earning based on EBIT margins. Okay. You can
Ah,
take net profit margin also.
So,
It is not exactly
ah,
price to earning, because I have not taken net profit. Okay. I have not taken this
right.
net profit margin. Okay.
Okay,
So
okay.
yeah, because why I'm telling you, know, at this level, we would like to compare different companies, that at that margin, which is more attractive. So now we will come to that question. I'm coming to that, your next question. Now, if you see interest, okay, see here how much they are paying interest in 2015, 900 crores, correct? Profit kitna hai?
Yes.
368. So actually, if you see, by operating profit is 368, other income has increased actually. That's why you see profit here. But if you
Correct.
remove other income, 368 minus 942, actually it is in loss. Correct.
Right.
Now, what you would
Yeah.
like to do, same industry, which is the other company who doesn't have interest, because that will re-rate faster when margins will improve. Correct.
Yeah.
Yes or no? So that's why
Yes. Yes.
I'm not considered net profit margin. I have considered EBIT margin, because when we are doing such kind of value buying, we want to compare different companies and see below the EBIT level what is the interest and depreciation, mainly interest. So if it is very well funded, cash rich, debt to equity very low, then chances of re-rating will be very high. Correct?
Yeah.
Like that. Now, why I have taken this Jindal Stainless? Because they are the leader in stainless industry. So always what we will do is, whenever you are analyzing, next point is, third point is, I have not written there. No, I thought I'll write is start with the leader in the industry. Okay, because if you're not following the leader, what will happen? Small players will anyways go off, correct? But leader will stay, correct? Top 2-3 leaders will stay. So always start comparing with the leader. Okay, and then go to next and then next. So it will help you. Okay, so now if you see here, next what happened is margin improved 573 crores, interest is 1030 crores, interest has increased. Okay, next what happened? Operating profit 1100 crores, margin improved, correct? Interest has come down. Now here is where I got confused, that profit is 1100 crores, obviously a little higher, but how such a dramatic decrease suddenly? Okay, and then I went to balance sheet, and when I saw, you can see 2016 and this 17, is it possible? How much debt has been reduced? Long-term borrowing? See, 16,
Almost half.
almost for the 3000 crores, correct? Not a small amount.
Yeah.
How can, with a profit of just 500 crore extra in operating level, how a company can pay 3000 crores suddenly? And long-term borrowing has also come down by 400 crores. A short-term borrowing has also come down by uh, 300 crores, correct?
Right.
How they got 3000 crore? Then I read annual report of 2016. Okay, so I have kept it open for all of you, because when we are doing this, it really helps. See, I did Control F, I did borrowing. Okay, I didn't got much information. Then straight away where I went, earlier fundamental also I have discussed so many times. Where I went, the best thing to do is to go to where?
Cash.
Cash
Very,
flow.
very good, Samaj. Cash flow statement. Why? Because what has happened here? What they have reduced? Debt. Can they reduce without the cash flow?
No.
No.
So we want to know the
Cash
source of
flow.
cash, correct? How you
Yeah.
will come to know. So see, this is how, if you have uh, if you have seen the earlier classes or all those who have attended, this is how it will help you to quick start your journey. Immediately you know where to go and find the numbers, correct? Straight I went to cash flow rather than reading the whole thing. And then what I saw here, where I'll go, they have prepaid the debt, correct? So first, where is the cash in from investing? So you see this scheme of arrangement. So they have divested some 1 or 2 companies, and then there is a cash flow, and with those subsidiaries there was some debt. So debt has also gone out of the books because of that demerger. Okay, so that is how this capex has, means this debt has come down. Now imagine this information you have that day, that suddenly you see debt is also. So what will happen? 2017, you know, not 2018, what will happen? Your interest cost will increase or come down?
Decrease.
Come down.
Come down.
Come
And
down.
then
Come down.
and then you have the perfect recipe for re-rating, correct? Yes or no?
Yes, yes.
And then what has happened in 2018? After 2018, see, 2018 from here to here, COVID, and then you can just see. Actually, this could have given good confidence to you start accumulating 2018. Yes or no? And from here, how much you will lose? See, the money you will lose from here is very, very low, and chances of re-rating is high. And then you see there's a straight no movement. See, all these are accumulation actually. Correct. You can see all this is accumulation. You can see the volumes also increasing. Correct. Like, and this dip, I'm sure there will be some margin dip. 21, 22. 21, 22. Is there a margin dip? 2012. So after that it has come 9 to 12, 2021, and 22. See, you can see 12 to 16, and then now again it is 10%. So 23 was 10%, and now currently you can go to quarterly result. Again, you can check what is the latest margin. Now it is how much? Again from 10, it is increasing. Correct, no?
Yeah.
Yes.
Again, so again in future, if you get 10% or 8% margin, good time to accumulate. Yes or no? Now, why? Because margins have increased. Because now you should not expect. Why I'm telling you is now you should not expect 5% margin. Why? Because now interest has also come down, correct? Slowly. So company is doing good. Now capex is around. Now if you see the capex, what is the capex now? CWAP. What is the capex now?
980.
979 crores, correct? And this is actually not 979. If you go to the con call, if you go, capex. See how many times capex has been used. Okay, because the whole game is about capex. How much they're doing capex? Almost
300.
3,300 crores.
3,300 crores.
Okay, huge capex. Okay, so and then obviously they will slowly pay off also. So hope you can understand why I have discussed this ratio. Okay, so now below if you go, so worst case, if 5% margin, what is the EBIT? You like this, you can write down worst case, average case, best case. And here I have highlighted in the Excel also. March 15, 16, 5 to 8%. What will be the EBIT? What will be the interest? And then most important is what is the cash balance? This is very important when you're analyzing different companies, correct? So like this, you can mention cash balance and you can see how they can repay if they're generating extra. Now suppose here EBIT is say 2,200 crores. Now then we'll come to the concept of free cash flows. Now suppose EBIT is 2,000 crores. Okay. Cash balance is say 1,700 crores. Interest is 700 crores. What will happen? After this, some 1,300 crores is left. Okay. Say, say debt is around, assume 800 crores and they have repaid 400 crores from the 1,700 crore balance. Or even if they have not paid net, they are debt free, correct? 1,700 crores of balance and debt is 800 crores. Even if debt is 1,200 crores, they are net debt free, correct?
Yes.
Yes or no? So like
Yes,
this,
yes.
when you are analyzing two companies, that is how it will help you then. So I have kept this. This part is very tricky when you are analyzing two companies. So then you should focus whether it is debt free or, and that is where it will help you to understand the re-rating part actually, correct? Like that. So down also balance sheet I have highlighted. See, immediately my eyes went how this happened actually. And then slowly you can see from 8,000 crore, what is the debt level now? 2,700, almost 1/3, correct? From 8,000, 9,000 crore. See here it was 2,000 and 9,000 crores almost, correct? Now it is 2,700. Now because of capex again they would have taken and it is increased, correct? Like that. Clear?
Yes, yes.
Okay, no?
Yes.
So very important ratio. So please, whenever you are doing your analysis, please keep this in mind. Okay, it will really help you to do actually understand what is the downside. And if it is the lowest margin last 10 years, definitely, and it is a debt-free company or very well managed top player in the industry, nothing like that. Okay, really help you to give a lot of confidence in terms of value buying and re-rating also in future, like that. Okay, because you are buying at the lowest margin, correct? So like that. Anyone has any doubt? So then I'll stop the recording and then we'll go to next part.
No doubt.
Neeraj,
Huh.
this PE ratio is there, no? That is the after tax ratio, right?
Price to earning. No? How much
Price to
earning? Earning is after tax only. No, means
after tax.
what shareholder will get is after paying tax only. Correct.
Yeah. So that
Like
price means whatever the stock price or which price they are talking?
price, stock price.
Stock price.
Huh.
Okay.
So
Earnings to stock price.
ultimately, whether you take market cap or total earning, or you take per share. Now, if I divide this this market cap is the total value and
Correct.
divide it by per share. So if I divide by number of shares, market cap, you will get price per share, correct? And
Correct.
down whatever earning is there, I divide it by number of shares. I will get per
Okay.
share earning,
Okay.
correct? So it is
So
same only. So for example,
but this ratio is better than that ratio.
This-
That is what you are saying.
no. This ratio, it's not about this is better. Why I have taken this ratio is this
Hmm.
ratio will help you to compare two different companies in the same industry. And then you
Okay.
can check about the interest part. You're getting
Right.
a point. Then you check
Yeah.
the interest part and then decide where to go. If you go
Okay.
directly bottom, then you don't know how is their debt structure, correct? Some company may be debt free, other may not be debt free, correct?
Right.
So it will help you to understand the re-rating part actually, like that. That's why I took this part, EBIT part.
Okay.
Okay.
Okay. A bit part. Yeah.
Like that. Okay. Because we are trying to understand we are starting with the leader, correct? For example, why I'll tell you, okay, I'll take one practical example. Okay, why this? Now I'll take Phenolics. This Phenolics we are holding since grandfather time. So I can tell a little bit about this. Phenolics, what was the margin? So we are going to again yearly, okay? 2012 to 2023. What is the margin? 2012.
10%.
What is the lowest in last 10 years?
9%, I guess.
2050.
7%.
Yeah.
In fact, 7% now currently.
Yeah.
Correct. Next time, if it, so you are sure somewhere around 7 to 9% is a good time to start accumulating. Yes or no? Correct.
Yes.
Okay. So let's take 2015 to 212 crores. Interest is how much? 70. Correct.
Yeah.
Depreciation 59, 2,400 crores. And then you can see the growth is not too much. Little growth is there, correct? See, 2,400, 2,600 like that, correct? And then suddenly now you see a little good growth here, this part, 21, 22. But here there is no growth in sales actually, these 3-4 years, correct? A little growth, that's it, 4-5%, 2% like that. Earnings also, if you see here, interest, 70, 45, 50, and then suddenly interest has come down, correct? See, 2017 to 18, interest has come down suddenly, correct? Now,
Yes.
even though sales have not grown, now you find the same one more company, okay, where operating profit is this, but debt is huge. Okay, 400 crore, 200 crore, they are paying interest. Okay, so which one you will prefer? Say, provided there is no huge capex and all. Obviously,
Where the interest is low.
interest is very low, correct? So,
Yeah.
so risk is very less, correct? When if
Mm.
suppose from 16, again, if comes down to 9 or 5% also, they will survive. Phenolics will survive, correct? Now let's see what happened to the share price. Now, if we see 16 to 17 and especially 16 to 17, why? Because suddenly interest has come down, correct?
Yeah.
So 16 to 17, definitely price would have gone up, you see. If I go 10 years, 16 to 17, 16 was 76, 17 was double,
Yeah. Almost the double difference.
correct? And then consolidation, and then again you can see this up, going
Mm.
up, correct?
Mm.
Now let's compare. Now who is the industry leader? Polycab. Okay, same industry. Now let's see 16, 17 and that Polycab, how sales was growing for Polycab. Okay, 2019 only we have data. So 19, how? So let's compare Polycab. Polycab 2014. See the growth, 5,200, 5,000. Already this was bigger than Phenolics,
Mm-hmm.
correct? And you see the growth, how they are growing. 2020, they are already 8,000 crore. And Phenolics, 2018, they are just 2,700. That's it. 1/4. So what happened to Polycab? Let's see the chart. Now, see Polycab, how it has grown. Polycab. So we have 2019 listing after that. You can see it has 2020, 21 just grown. And Finolex from 1000, it is almost now 5x in 2020. And Finolex being recorded. So this is bottom actually. You can see 2021 to 400 to now just double. So Polycab has increased 5x and this is just doubled for Finolex. Why? It's not growing like that. So what is happening is same industry, both are cables. Now who has become the leader? Polycab or Finolex?
Polycab.
Polycab has become the leader, correct? So what will happen is when you see the sales, you will see when you start comparing 2-3 companies, okay, Polycab has already crossed Finolex, overtaken the leader, correct? So
Yeah.
that will really help you. Now, if you go to EBIT level, okay, now let's go to EBIT level. Okay, here what I'll do is I'll just let me compare here. This is what Finolex. So I'll just copy. Okay, this is, let's copy this only till EBIT level and interest. So what will happen is now leader, even if he's taking some debt, doing capacity expansion, you will not mind. You're getting a point. So this is Finolex. And let's go to Polycab. It's Polycab yearly. Okay, so 2014. So let me move this little bit here so we can compare apple to apple. Okay, so you can see already taken over, correct? Now margin is 8%. Here margin is very good, 16%, 9%. Even if at 9%, but they are doing Finolex has more margins actually, correct? See? But profitability, what is happening? Even though margins are more, how much is the profit? 442, double. See? Because they are not going their sales actually. Correct or no? And how profits are growing? See now, 1500 crores and they are still, okay, let's take till here, 200 crores extra, 300 for 245 crores, 600, 700 crores. 700 crores is the difference here in profit between Polycab and Finolex. 700 crores. Sales are increasing. Correct. So you want a growth company or you want a no growth company? Because I'm sure they will not be doing any capex now. Finolex. Yes or no? So basically,
Yes.
Polycab has started gaining market share actually. Correct. Now they're almost how much? Trailing 4x. Correct. 4x of Finolex.
Yeah, almost 4x of
4x.
Benelux.
Correct. And they'll keep gaining. See, once you become big, so then you have economies of scale. Correct. And interest also, if you see, not much. See here, if you see interest 75 crore, 45 crore, 10 and then 20, 27. Here also you can see it is very well managed actually. Correct. So on a profit of 1800 crores, you are paying it is almost negligible. Correct. Now let's take interest cost. What is the interest cost based on operating profit? So interest divided by
Operating profit.
percentage 9%.
9% of operating profit.
And same thing if I copy here. interest
Divided by profit.
interest divided by operating profit. What is the percentage? Just
3%. That's a healthy indicator.
so you can see it is coming down, keeps coming down 4443, and then you can see the re-rating from 1920 and then going up, correct? Like that.
Yeah.
So now obviously we'll see so many other companies, you will have more insights. See, now we are getting so many insights, correct? And then you can do your all kinds of additional analysis what you want to do. But how beautifully it will help you. This all started with margins, and then you go to competitor, and then you see, okay, now Finolex is not the leader, Polycab is the leader, correct? And then the
Yeah.
whole thesis will change, correct? Like that. But always good to, that is why always good to start with the leader. Okay. Anyone has any other question?
But from the insights, we can say that Polycab has always been the leader when compared to Finolex, right?
Yes. So before this, we don't have data actually. So we can see earlier, before we go 2010, 2008, Finolex was the leader actually. And then slowly Polycab came into picture.
Yeah.
Like that. Yeah.
Okay. That's a good idea.
Yes.
Thank you.
Okay. So Jindal Stainless, who is the competitor? Jindal Stainless, other stainless. So you can just type here Jindal Stainless. Go, you can compare here. You can check, go and check Sham Metallics. You can check Ratnamani and all those things. So like, so Ratnamani basically is into tubes and all. So you can check all this. Who is the next, this one. Like that. Okay. So you'll have a fair idea like how to come. That's it. So anyone has any other doubt? Hope you got a very broad and in-depth idea also how to start and how to go to next level. Okay. So both the things I have discussed here. Okay. So like this, you can just copy paste in Excel, and then you can create scenarios. So it will help you that if margin will be 5%, if it is 8%, then 13%, then what is the interest they are paying, how they can repay the debt, what management is telling in the con call, and then you can decide how to go about that. Okay. Like, good. So any other doubts? Okay. Done. So I'll stop the recording now.
Just this market cap to sales ratio is only going to help with the comparative analysis of two companies or more companies, right? If you want to just analyze one company in as a standalone, this ratio might not be so useful.
So standalone also, how it can help you is if it is a leader. Now this is, for example, is leader. So
Mhm.
you are following this company, but the moment you say lowest margin or near lower margin,
Mhm.
then you definitely will get interested that, okay, this is the time to start accumulating the stock. You are
Okay.
waiting in sidelines, and then you see compressed margin. So
Mhm.
right time to start accumulating the stock, correct?
Okay.
Correct. So then you create, now if I margin will increase next 1 or 2 years 8%, then how the profitability will increase. If it goes to 13%, then how profitability will increase.
Mhm.
How, whether they will be able to manage their interest cost. What is the cash balance? Then you see the debt, correct? And then like that. So very easy to protect, do value buying actually, like that. A depressed margin, like that. When you see a decade of lowest margin or near that, it's means it's like a value buying, correct? And you are talking about the leaders. I'm talking about start with the leader, correct? Analyzing the leader, like that. Because small players will go off whenever such things will happen for a long period of time, correct? 3 years, 4 years of compressed margin, definitely small players will go out of the sector, out of the business, correct? Like that.
So but currently Jindal Stainless is
They are the
having
leader in steel,
compressed.
stainless steel. Yeah, they are the leader.
No, it's the leader, but the
Yes.
market cap to sales ratio is 1.4 times, right?
Yes. So now what happens is, now see, still it is okay. Now what happens is, if margins comes to 7%, you know that it is a time to start accumulating the stock, correct? Because obviously
Okay.
price will correct, and then you are getting at a very good bargain, correct? Even though
Okay.
market cap has increased, sales have also
Yeah.
increased. But because margins have come down, you are not seeing that kind of profitability, correct?
So we should
And
always look at
resulting
the
to depressed
historical
prices.
prices.
Sorry?
Historical prices compare करके इसको decision लेना है.
Prices will come down, no, definitely, because margins are not there. Obviously, prices will come down, correct?
Right. Currently it's at 13% or 12%.
Now is the highest. So
margin.
you will see a highest price. No?
Highest.
Now you see
Yeah.
gain in
Right.
market share, industry leader. Now it is all masala is there
Yeah.
for the highest valuation, correct?
Yeah. Yeah.
But now the trick is, if you see, now promoters have started buying. Still at current level also, promoter has increased the stake, correct? So now promoter has increased again. So you can see 1%, 1.7% increase, correct? So this is also
But the wait can be long, right, Neeraj?
wait will be long. That's what I'm telling. No, now see, promoter has increased the stake, correct? Now suppose
Right.
next quarter suddenly you find margins have come down. Now what is the margin? See, that means promoter is showing the confidence, correct? Next, say next quarter or next 6 months, suddenly you see there is margin compression. It comes down to 10%. Then definitely you can start 8%, 10%, correct? You can start accumulating, correct? You can see suddenly from 15 it has come down. In 2 quarters it has come down to 8%. This was a very good time to accumulate. September 22. What was September 22? September 22. July, August, September. See, you tell me. You're getting a point. See,
Yes.
what else you want? You're getting a point.
Yeah.
This is what I'm trying to tell. See, it is there in front of you. Before that, high margin, it was already up. Correct. From
Okay.
200 rupees
This
stock,
is
you
how
are
you
getting.
find out the
Haan,
re-rating part, right?
200 rupees stock, you are getting now 100 rupees. So you know, okay, bottom, you are buying at the good price actually, like that. Downside is limited, like that. Correct.
Okay.
Now, because margin has gone up, this has happened immediately. Now, this can continue for 1 year, 2 year also. Now, that is where now the psychology part comes into picture, correct? How long you hold, how well you understand the company management and all. This is the immediate you are seeing, correct? So you see immediate jump in price, correct? But this may not happen always, correct?
Yeah.
Like that. Okay. Any other doubts? Okay. So very good question. So don't. So this is like, then your psychology will start once you have entered. Okay. So like, okay. Done. So now I'll go to next part. I'll stop recording.